What if I told you that one of the world's most dominant tech companies, a true titan of the digital age, is currently trading at a price that simply defies logic? It's the kind of disconnect that makes seasoned investors sit up and take notice, and yet, most people are missing it entirely. Picture a giant that leads not just in online shopping but also in cloud computing, logistics, and cutting-edge artificial intelligence. This company's technology powers millions of businesses and touches the lives of billions of consumers every single day. And yet, despite its reach and innovation, the market has turned its back on it, casting it aside as if its best days are behind it. But let's be clear. This isn't some speculative startup hoping to make it big. We're talking about a cash-generating behemoth with a global footprint. A company that's woven into the fabric of the modern economy. Its revenues stretch across continents, and its influence is felt in nearly every sector you can imagine. The truth is, the best investments are often found where others are afraid to look, hidden in plain sight among companies that have been unfairly punished or misunderstood by Wall Street. Sometimes the market's short-term fears create long-term opportunities for those willing to dig deeper. As an individual investor, you have a unique edge. You're not bound by quarterly earnings cycles or institutional groupthink. You can take the time to dig into the facts, analyze the numbers, and see the real story behind the stock price. This is where fortunes are made, by seeing what others overlook. Right now, there's a world-class business with incredible growth prospects, a fortress balance sheet, and a track record of innovation. Yet it's trading at a bargain bin price. It's the kind of setup that legendary investors dream about, a high-quality company available at a deep discount. This is the classic setup for a potential Tenbagger, a stock that could multiply your investment tenfold over time. These rare opportunities don't come around often, but when they do, they can change your financial future forever. Hit the like button, let's get 1,000 likes on this one, share the video and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Today, we're rolling up our sleeves to dig into one such company, Alibaba Group Holding, ticker symbol BABA. Once the darling of global investors, Alibaba has seen its stock price battered by regulatory crackdowns, geopolitical tensions, and negative headlines. But beneath the surface, the fundamentals remain strong, and the potential is enormous. Despite being a key player in the global AI gold rush, Alibaba has been left behind by the market, overshadowed by its American counterparts, and dismissed by many analysts. But history shows that the market often gets it wrong, especially when fear and uncertainty cloud judgment. In this video, we'll explore Alibaba's core businesses, its rapid advancements in artificial intelligence, and the hidden catalysts that could send its stock soaring in the years ahead. We'll look at the numbers, the strategy, and the vision that make Alibaba a force to be reckoned with. By the end, you'll understand why Alibaba stands out as one of the most compelling contrarian opportunities in the market today. A misunderstood giant with the potential to deliver extraordinary returns for those bold enough to look past the noise. So let's get started and uncover the hidden value that Wall Street has tossed aside, because sometimes, the greatest treasures are hiding in plain sight, just waiting to be discovered. Let's start with the numbers. Alibaba is trading at a forward PE of just over 12, while the global tech average is over 21. The market is saying Alibaba's future earnings are worth far less than its peers, which is baffling. Why? Headlines scream about China's regulatory crackdowns and geopolitical tensions, but the market often overreacts, selling first and asking questions later. Some analysts believe Alibaba is trading at a 50% discount to its true value. This is where patient investors find opportunity. Alibaba isn't just a Chinese company, it's a global tech powerhouse spanning e-commerce, logistics, cloud, and AI. To value it so cheaply ignores its powerful growth engines. Look under the hood, and you see a company innovating and expanding. The key is separating noise from reality. The reality is in the financials, market position, and strategy. Alibaba's fundamentals are screaming opportunity. The market is pricing in disaster, but the numbers tell a different story. This disconnect is where savvy investors can plant seeds for massive returns. Alibaba's foundation rests on two pillars, its sprawling e-commerce empire and its rapidly expanding cloud business. These two engines not only drive Alibaba's growth, but also shape the future of digital commerce and technology in China and beyond. The company's vision is to connect buyers and sellers, businesses and consumers, all powered by cutting-edge technology and seamless digital infrastructure. Taobao and Tmall, Alibaba's flagship platforms, command about 60% of China's retail market, an astonishing level of dominance in one of the world's largest consumer economies. Every day, millions of transactions flow through these platforms, shaping shopping habits and setting trends across the country. Internationally, Alibaba's commerce group is making waves as well. In 2025, its revenue jumped 32%, a clear sign that Alibaba's global expansion strategy is working. The company is reaching new markets, connecting merchants and consumers from Asia to Europe, and building a truly international presence. This impressive growth is helping Alibaba diversify its business, making it more resilient to market shifts and economic cycles. By spreading its reach across different sectors and geographies, Alibaba is building a foundation that can weather storms and seize new opportunities. Now let's talk about the cloud. Alibaba is a true leader in cloud computing, which has become the backbone of the digital economy. Its cloud services power everything from small startups to massive enterprises, providing the infrastructure that keeps the digital world running. The numbers tell the story. Alibaba's cloud division grew revenue 13% year-over-year in December 2024, then accelerated to 18% the very next quarter. This kind of momentum is rare, especially in such a competitive industry. Even more impressive, AI-related cloud products have posted triple-digit growth for 6 straight quarters. This surge is fueled by businesses racing to adopt artificial intelligence, and Alibaba is right at the center of this transformation, providing the tools and platforms that make AI accessible. While Alibaba's stock price may not reflect this explosive growth, the company's high-growth segments are thriving. Investors might be cautious, but the underlying business is anything but stagnant. Alibaba's cloud isn't just about storage or computing power, it's the engine driving its AI ambitions. The company is investing heavily in research and development, pushing the boundaries of what's possible with machine learning, big data, and automation. This is a company hitting its stride in the most important technology race of our time. As the world shifts toward digital everything, Alibaba is positioning itself at the forefront, ready to lead the next wave of innovation. The combination of e-commerce dominance and cloud acceleration gives Alibaba a powerful base for long-term growth. Few companies can match this blend of scale, innovation, and financial strength. These businesses generate the cash that fuels Alibaba's future investments, from new technologies to global expansion. It's a virtuous cycle of growth and reinvestment. The market may be missing the bigger picture, but the numbers are clear for those who look closely. Alibaba's fundamentals are strong, and its growth engines are firing on all cylinders. This is not a company in decline, it's a giant gaining speed, building momentum and shaping the future of global commerce and technology. When people think of artificial intelligence, the first names that come to mind are usually the giants. NVIDIA, Google, Microsoft. These companies dominate headlines and are often seen as the driving forces behind the AI revolution. But there's another powerhouse quietly shaping the future: Alibaba. While it may not always be in the spotlight, Alibaba is a major player, steadily building the models and infrastructure that are powering the next wave of global innovation. Its influence stretches far beyond e-commerce. By open-sourcing advanced models like 𝗗𝗜𝗦𝗖𝗢𝗗𝗘, Alibaba has fostered a thriving global developer community. On Hugging Face alone, there are now over 90,000 derivative models, each one a testament to the reach and impact of Alibaba's technology. Developers from every corner of the world are building on top of Alibaba's work, accelerating progress in AI. This open approach isn't just about sharing code, it's a strategic move. By making its models accessible, Alibaba drives adoption and fuels demand for its cloud business, since developers need powerful computing resources to run and scale their AI applications. It's a virtuous cycle. Better models attract more developers, who in turn create more innovative applications and push the boundaries of what's possible. These developers drive more cloud revenue, which then funds the development of even better models. The ecosystem grows stronger with every iteration, creating a self-sustaining engine of innovation and profit. Even in the face of US chip restrictions, Alibaba's Ant Group has shown remarkable ingenuity. By combining American and Chinese semiconductors, they've managed to keep their AI ambitions on track, and have even succeeded in cutting AI training costs by 20%, a significant achievement in a field where every efficiency counts. This is innovation under pressure, turning constraints into advantages, and finding creative solutions where others might see only obstacles. Alibaba's ability to adapt and thrive in a challenging environment sets it apart. As a result, Alibaba's AI ecosystem is expanding at a rapid pace, attracting talent, investment, and attention from across the globe. The company's strategy is clearly paying off, with strong growth in both technology and business metrics. Alibaba isn't just keeping up with the world's top tech companies, it's setting the pace, influencing the direction of global AI development and shaping the future of technology. While others are content to talk about the possibilities of AI, Alibaba is busy building and deploying real-world solutions at scale, impacting industries from logistics to finance to healthcare. The market may not fully recognize Alibaba's AI leadership yet, and many investors are still focused on the usual suspects. But make no mistake, the groundwork for future dominance is being laid right now, brick by brick, line by line of code, and strategic decision by strategic decision. This relentless drive, this ability to innovate under pressure and build for the long term, is the hallmark of a true innovator. And it's why Alibaba is the AI powerhouse you didn't know. The numbers back up Alibaba's story. In December 2024, income from operations soared 83% year over year to $5.8 billion. This wasn't luck, it was smart management, cost discipline, and AI-driven efficiency. Alibaba sits on $51.9 billion in net cash, giving it flexibility to invest, acquire, and return capital to shareholders. The company has a $22 billion share repurchase plan and bought back $1.3 billion in just one quarter. Buybacks signal management's confidence that shares are undervalued. Each repurchase increases value for long-term investors. This is a healthy, mature, and confident company, not one on the brink. The financials are clear, soaring profits, a rock-solid balance sheet, and aggressive buybacks. Alibaba can weather storms and invest for the future. The market's fear is your opportunity. The numbers don't lie. This is a fortress of financial strength. Every great investment needs a catalyst. For Alibaba, it's the potential Ant Group IPO. Alibaba owns a third of this fintech giant, and Ant International's upcoming Hong Kong IPO could be a game-changer. The company has regulatory clearance, signaling a more stable environment. Analysts project the IPO could raise up to $24 billion, with Alibaba's stake potentially adding 15–40% to its enterprise value. This event will force the market to recognize the value of Alibaba's hidden assets. The IPO is a wake-up call for Wall Street. The sum of Alibaba's parts is worth far more than its current market cap. No investment is risk-free, and Alibaba's risks are well known. US-China tensions and China's regulatory environment. US chip restrictions could slow AI development, but Alibaba has shown it can innovate around these challenges. Regulatory crackdowns have hurt confidence, but recent settlements and the Ant IPO signal a stabilizing landscape. The company is working to resolve legacy issues and adapt to new rules. The real question, are these risks already priced in? For investors, the reward may far outweigh the risk at today's valuation. Alibaba has proven it can navigate storms and emerge stronger. Step back from the headlines and you see a company thriving in a tough environment. Alibaba's core business remains resilient, even as it faces competition and regulatory pressure. 32% growth in cross-border commerce in 2025 shows its strength. The company adapts, innovating in AI, complying with regulators, and defending its turf. This adaptability is a crucial asset, often overlooked. The market prices Alibaba as fragile, but the reality is a robust, innovative giant. The disconnect between fear and fundamentals is stark. For those who look past the noise, the opportunity is clear. Alibaba is built to last and to grow. Alibaba is profoundly undervalued, a tech leader trading at a bargain price. Its e-commerce and cloud engines are dominant and accelerating, funding world-class AI innovation. The Ant Group IPO could unlock billions in value, forcing a market re-rating. With a fortress balance sheet and aggressive buybacks, Alibaba checks every box for a classic value investment. Investing now takes a contrarian mindset and long-term vision. For those who can look past the headlines, the potential rewards are immense. This is your chance to buy a global tech leader at yesterday's prices. Don't let this hidden Tenbagger pass you by.